Good afternoon, traders, and welcome back to the Hot Stocks Outlook for December 14th, 2018. Hope you're all having an excellent week in the financial markets, and as always, plenty to cover in today's Outlook. We're going to look at U.S. Steel. We've got General Mills, Palo Alto Networks, PICO Holdings, and also ResMed. But let's go ahead and start out here with the steel and aluminum manufacturer here. We have U.S. Steel, a lot going on in just this sector. So what we've seen is just a lot of these markets turn lower. And here in shares of U.S. Steel, what we have here are daily bars and candles. This is daily price action, so each one of these bars. And against that, there's a few indicators that round out these forecasts. Now, against that price data, the first thing that you'll notice is a black line and a blue line. Now, the black line that you see on the chart, that is a actual or simple moving average. So very common technical indicator, easy to calculate. Just take the last however many close prices, add them all together, divide by however many days, and you get a moving average. But what we want to compare that value to, which this value acts as a great representation of where the market has already been, is comparing that to this blue line on the chart. Now, that blue line, that is a proprietary predicted moving average. So it's actually using artificial intelligence, a technology called neural networks, to analyze how other markets are influenced and affecting, in this case, U.S. Steel. And obviously, these markets are heavily driven by what's going on internationally, the value of the dollar index, crude oil prices, other related stocks, ETFs. And then it's forecasting that value forward so you know, hey, what's the expected trend direction, right? So if the predicted average is lower than the actual average, or the blue line lower than the black line, it's saying the trend is lower or down in this case. Now, in addition to that, you'll notice at the very bottom of the screen, we have an indicator that's bearish here, bullish here. This is called the predicted neural index, and it's an extremely accurate 48-hour indicator. So it's only looking ahead 2 trading days, 48 hours, very, very short term. And that can help you with short-term strength or weakness. And to really round out the forecast, you have this predicted high and low. So you see how you have a grayed out bar there. That will be populated by the actual market data, which we see we have going back here over the past month. That will be populated with the actual market data, and we'll see how accurate all of these forecasts and predictions are. So as a trader, when you understand, hey, there's been a fresh trend reversal, there's been an opportunity opening up here to the downside, I want to look to take short positions. I want to use the neural index to help guide me of short-term strength or weakness, not to get too razzled if there's a little strength coming into the market against you. And then look towards those predicted high levels. So you see how in this market, well, what are you doing? You're coming in shorting up at predicted highs, right? You want to be short in line with that trend. But notice here, neural index up at a 1. We get a little bit of a bounce there up to those predicted highs, a little sideways price action, but the trend still very much to the downside. Here we bounce a little bit higher. Neural index stays negative. It's saying, look, remain short. Another area we get very close to that predicted high. Here we bounce a little higher from this strength from the next couple of days. But you just see how many entries on the short side of the market. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 entries over the past couple of months. And every day this market's moving down a couple of percent and opening up a really fantastic trading opportunity for traders who understand that, okay, there's an opportunity here. We can come in and manage it. You see this market's down 25%. So this whole sector is really getting hammered, and that's what you really see with the VantagePoint software is as these sectors move, as certain stocks start to rotate, higher or lower, and it really gives you a lot of confidence. It says, okay, well, this whole sector is doing poorly. All the forecasts are down. Let me focus on that and, get 10 short trades to the downside here, all of which becoming profitable. Here's General Mills. So, in October, a lot of the consumer staples actually did very, very well. But things have changed, right? And so they did really well through October when the markets were getting hammered. And then look on General Mills here. We get this crossover to the downside. Neural index very weak. We get a little bit of a bounce here, a little bit of bounce coming in here. But overall, a lot of separation between that predicted moving average and the actual. So the more distance you have between those values, the stronger the prediction that those average prices are expected to continue moving lower. So again, we'll say, okay, well, let's look towards those predicted levels. So when we come in intraday and trying to decide, okay, well, where do you want to short? Look towards these intraday levels to get a good intraday level or entry on a longer term trend. So you see, again, another example, about 5 entries here as this market starts to trend lower. And of course, use these tools to adjust your position over time. That's really the benefit of these short-term forecasts, understanding how to adjust that position over time so that over these 15 trading days, you're taking profit, reshorting, and at least getting this 13.5% move, $6 per share to the downside. So again, you buy some put options, you go ahead and short a few hundred shares. They're even doing very, very well to the downside there in just the month here. Palo Alto Networks. Now, there has been some strength in the market, but of course, things are volatile now. You want to know, hey, intraday, how should I be managing things? We have days where the S&Ps, used to only go up, quarter, 0.5% a day. Now we get 1 or 2% swings in the mix and usually moving at least 0.5% or 1% up or down. And that's where markets can get really tricky. But notice this price action, right? You've got a gap up, you gap lower, you're all over the place, but the trend is to the upside here, right? So overall, you've got a lot of separation from that predicted average away from that black lagging actual moving average. And then we can use our predicted levels, right? And you see how effective this is of saying, okay, prepare for the market to trade lower here. You see we just move up to that predicted high, but how the levels adjust and adapt is really the key here. And that's what's going to help a trader adjust and adapt and understand, okay, take some profit up here, buy back at lower levels, and get really great entries on trending markets. So in this case, we see after this crossover coming through, up 8% just in the past 9 trading days. So very short term. And then again, I referenced this predicted levels, right? So, you're coming in, buying some down here, maybe taking profit here, trying to buy here, profit here, buying down here, buying down here, buying here, profit on these upsides potentially. So, you just want to use the tools to match your time frame, your trading style, and just understand the time frame that these indicators are forecasting for and predicting moving forward. Here's PICO Holdings, a very similar situation where we've gotten a lot of volatility and strength, but crossovers to the upside, see all this volatility, some of these things doing well, but you don't want to be short here. And that's, just as important as making money to the upside, but understanding which markets, you wouldn't want to short. If anything, you'd want to go ahead and get long. And again, come in with those levels so that you're not only getting long or short the market, but doing so at a very good intraday price so that you can, run shorter stops. You don't have to run these gigantic stops for your shorter term trades. And understand where you should be adding to a position, where you should be taking profit at certain levels along the way so that you can adjust and adapt as your position, changes and adapts over time and new information comes into the market. So here, a little bit of a move, but more so just pointing out the volatility on things like Palo Alto, PICO, where those predicted highs and lows just do a great job of adjusting and keeping you in the market and doing the right thing. Here in ResMed here, so very straightforward, crossover to the upside. You want to go ahead and get long. You see the neural index here, saying, okay, couple days of weakness, but huge amount of separation between that predicted moving average and the actual moving average. And so, of course, you want to remain long, look towards predicted lows to be getting long the market, taking profit at the predicted highs. And you really see how this works out. Predicted lows doing very well. And within a day of taking any of these entries, moving up to predicted highs and the market moving higher. So overall, this move here, really early here in the move, but over 10% move to the upside in just the past 11 trading days. So not only that is understanding that, okay, well, there's 11% move to the upside here, but then knowing, hey, you can get these cheaper prices. When you see that pullback come into the market, look over those trading days to be getting long and participate in that uptrend as it continues. So really nice opportunities, a lot of mixed things going on in the market. You see some markets doing well, but a lot of these things heavily sector driven. So when you run these scans within the software, the IntelliScan feature, you see a lot of these crossovers coming through on very similar stocks and sectors right at the same time. And then you see all those stocks move in that direction. So right now we have U.S. Steel. We talked about the commercial or consumer staple, things like Johnson & Johnson and General Mills and Tyson Foods and all of these things. Really a lot of correlation in the market and really helps you understand where you want to execute your trading style and where you want to essentially have a lot of confidence that, okay, this makes a lot of sense. We can trade off of these levels, but of course adapt as the markets change and adapt, and you'll understand how to flow with that. So have a great rest of the trading week. Once again, this has been our Hot Stocks Outlook for December 14th, 2018. Thank you all again. Best of luck, and bye for now.